Figma just went public, and it could be one of the most exciting stocks of the AI era. They want to be the operating system for digital design and the foundation for building every online product. Could Figma be the next big AI platform stock like Nvidia or Palantir, or will generative AI make them crash like so many companies before? Your time is valuable, so let's get right into it. First things first, I'm not here to hold you hostage, so here's what I'll be covering up front: what Figma does and how they make their money, the markets that Figma dominates and how fast they're growing, Figma's AI strategy to fend off their competition, and of course, what all that means for Figma stock right after its IPO. There are timestamps so you can jump to different sections of the video, but let me point out a few things before you do. First, investing in IPOs always has some extra risks, like the stock being overhyped, the price making big swings as investors rush in, and limited financial history since private companies don't report their earnings like public ones do. So I spent the last week reading through Figma's S1 filing, which has all the information on the company, its operations, finances, and risks. Most of what I'll cover comes straight from the source, and I'm sharing my research for educational purposes only. Second, I'm not a financial advisor. My background is in electrical engineering and data science, and I have over 10 years of industry experience solving real-world problems with AI. I always invest for the long term, and only in companies that I understand, which is why every stock I cover focuses on AI and the chips that power it. And third, if you've been watching this channel for a while, you know that I invest in technology platforms that other businesses pay to build on top of. That's why I made so many videos on companies like Nvidia and Palantir. And to my surprise, Figma falls into that bucket too. Figma is a cloud-based software platform focused on collaborative design for digital products like websites, apps, and user interfaces, all through a standard web browser. Their tools span the entire product creation process, from brainstorming on virtual whiteboards to creating interface designs, building interactive prototypes, and transitioning assets and code to developers. In fact, Figma has deep integrations with development tools like GitHub and Jira, which position them as the visual layer of the entire software development stack. Figma's big value add is letting multiple teams of people across multiple operating systems work together on any phase of a visual project, all at the same time, all while seeing everybody's changes in real time, and all without ever needing to install an app, kind of like Google Docs, but for user interfaces. Figma software also enforces all design requirements across the entire process, which is huge for enterprises and big-name brands that go for specific looks and audiences. That's why Figma is used by designers, developers, product managers, and marketing teams at companies of all sizes, including 95% of the Fortune 500. As an investor, one thing that I like about this end-to-end approach is it makes Figma's platform really sticky, which means it's expensive and time-consuming for their customers to switch away from them, since they'd have to replace so many tools and workflows that span the entire design and development process. Let me show you what that means with a few key numbers that I always look at before investing in platform companies like Google, Nvidia, or Palantir. Figma has a 96% annual customer retention rate, which means only 1 in 25 customers leaves Figma within 1 year on average. Just for comparison, Adobe, which is one of Figma's biggest competitors, has around a 90% annual customer retention rate, and Netflix retains around 75% of their customers for a full year. So Figma's 96% retention rate is actually outstanding. But Figma also has a 132% net dollar retention rate. Net dollar retention measures how much recurring revenue a company makes from its existing customers year over year. So Figma's net dollar retention rate of 132% means their existing customers are spending 32% more with them this year versus last. I like to track these numbers because of how they work together. This is a plot of Figma's annual recurring revenue broken down by the year each customer was acquired. So the x-axis is time, the y-axis is Figma's total revenue, and each color shows how much the revenue from customers acquired that year has grown over time. Figma's trailing 12-month revenue is around $820 million. So if they're IPOing at a $19 billion valuation, then investors would be paying a whopping 23 times sales for this stock. But Figma's stock performance depends not only on the starting price, it also depends on how the overall market is doing. For example, we just saw that even the safest stocks crashed after President Trump announced new tariffs. That's why it's so important to diversify your investments with assets that don't correlate to the stock market. The problem is that most alternative assets either have high minimums, like private equity, or they're high risk, like cryptocurrencies. That's where the Fundrise Flagship Real Estate Fund, who's making this video possible, can help you. They give you access to invest in some of the best real estate strategies without breaking the bank. Real estate investments usually need a lot of upfront capital, but the Fundrise Flagship Fund gives everyday investors access to high-demand single-family rentals, affordable multifamily apartments, cutting-edge industrial warehouses, and commercial facilities, all in one portfolio designed for diversification and long-term earnings potential, with an access point starting at $10. They also have an impressive track record, already managing over $7 billion of real estate across hundreds of high-value properties. So if you want access to some of the best real estate across multiple investment strategies, check out the Fundrise Flagship Real Estate Fund with my link below today. Alright, so Figma's revenue for the last 12 months is $820 million, but their revenue is growing at a whopping 46% year over year, since they're retaining 96% of their customers and they're increasing customer spend by 32% each year. Let me show you a few examples to make these numbers feel more real. Netflix has been a Figma customer since 2020. Their designers use FigJam to explore new layouts for different devices, like smart TVs, tablets, and web browsers. Then they use Figma's dev mode tools to hand those designs to the engineering teams that actually implement them. Ultimately, Netflix redesigned their entire TV experience for the first time in 10 years using Figma's end-to-end platform. TV is Netflix's biggest device market by far, so this was a huge deal for them. As a result, Netflix has grown the number of seats they have with Figma by 9x since 2020, and Figma's revenues from Netflix have grown by 12x. That's a 64% compound annual growth rate over their 5-year relationship with Netflix. Stripe is a financial infrastructure platform that helps businesses manage online and in-person payments. It's also worth over $90 billion as of their latest funding round, making Stripe one of the most valuable private companies on Earth. Before Figma, Stripe used different tools to design products, their brand kit, and their website, which led to a lot of redundant processes and inconsistencies across their design portfolio. Today, Figma powers 100% of Stripe's design work, which means Stripe's designers have one source of truth for their visual language that they can use for everything from billboards to web interfaces. In fact, Stripe's first brand campaign was created entirely in Figma, and they've stayed with them ever since. As a result, Stripe grew their number of Figma seats by 249x since 2019, and Figma's revenues from Stripe grew by 213x, which is a 150% compound annual growth rate year over year for their entire 6-year relationship with Stripe. And as an investor, this is the best kind of revenue growth by far, because it's the most reliable and the lowest risk, since it's much cheaper to upsell existing customers than it is to advertise and acquire new ones. Here's a table comparing Figma to a few other companies that I cover. Figma's price-to-sales ratio is 3 times higher than Adobe's and 4 times higher than Google's, but their revenue is growing much faster and their operating margins are quickly catching up. So Figma's $19 billion valuation may not be so crazy given their revenue and margin growth. Speaking of growth, the global digital content creation market is expected to more than double in size over the next 8 years, which would be a compound annual growth rate of almost 13% through 2033. That doesn't sound like much at first, but here's what I found when I dug into the details. More than 75% of the content creation market's revenue comes from tools by companies like Adobe, Canva, and of course Figma. And it turns out that Figma has a whopping 40% share of the design software market today, which is more than their 2 biggest competitors combined. But the design market is actually consolidating around 3 different strategies: end-to-end software suites like Adobe's Creative Cloud, template-driven platforms like Canva, and collaborative development tools like Figma. Each approach focuses on different end customers and separate use cases like the ones I just went over, which means Figma actually has a much higher market share when it comes to collaborative design tools specifically. But as we all know, AI is changing everything, and Figma will have much tougher competition as new AI capabilities start blurring the lines between these different strategies and markets. In fact, the market for generative AI in UI design is expected to almost 8x in size by 2033, which would be a compound annual growth rate of almost 30% over the next 8 years. That means that Figma needs to have a serious AI strategy if they want to dominate the overall digital design market and provide real shareholder value after it goes public. So let's talk about Figma's AI strategy next. FigJam is Figma's digital whiteboarding tool, used for collaborative brainstorming, product planning, and mapping user interfaces. Figma is adding AI features like automated layout suggestions, intelligent spacing recommendations, intelligent handling of asset variants, and content-aware resizing, all of which positions Figma to handle more sophisticated design and interaction requirements. Dev Mode launched in 2023 as a way for Figma to add developer workflows to their growing list of revenue streams. Dev Mode addresses the challenges between somebody non-technical approving a design and the developers that have to actually implement it by providing code generation, asset measurement and export tools, and integrations with different development environments. That makes it the perfect part of Figma's platform to integrate AI tools like code generation, responsive design creation, and custom asset automations. That way, developers can inspect designs, extract measurements, copy code snippets, and track design changes, all without disrupting any designer workflows. Figma Make is their most aggressive expansion into AI content creation, and it just entered general availability this past month. Unlike competing AI tools that generate static designs, Figma Make takes in prompts and generates functional prototypes and interactive web apps that are ready for deployment. That means that even non-designers can create prototypes, validate concepts, and use existing design systems that stay consistent with the rest of the brand. This also gives Figma a huge advantage in terms of data from millions of users making billions of design decisions all across their platform, which can then be used to train the next generation of Figma's AI-enhanced design tools. While companies like Adobe build better design features, Figma is building the data infrastructure to predict what users want to create before they even realize it themselves, kind of like how Netflix can predict what you want to watch next. I think this is what will take Figma to the next level, by massively increasing their total addressable market, since these AI tools can add value across the entire product creation lifecycle for businesses of all sizes and verticals, from the biggest brands like Netflix and Stripe to small teams using no-code or low-code environments. This part of their business model includes AI credit consumption, which creates a usage-based revenue stream in addition to Figma's traditional seat-based subscription model. But this isn't just about adding revenue. Remember what I said about being sticky. If an organization uses Figma for design and development, the entire organization becomes dependent on Figma's workflows, making it much harder to switch to a different platform. Alright, now that we understand what Figma actually does, the markets that they operate in, and their overall AI strategy, we can ask the big question: is Figma stock a good investment right after its IPO? And if you feel I've earned it, consider hitting the like button and subscribing to the channel. That really helps me out, and it lets me know to make more content like this. Thanks, and with that out of the way, let's talk about Figma stock. Figma definitely has a lot going for it. Their customer count with businesses that make over $100,000 a year has been growing by 50% per year for the last 2 years. Figma's existing tools are much more popular with users than competing products from much bigger companies like Adobe, and they're constantly coming out with new tools to address design challenges at every step of the process, from whiteboarding with FigJam to transitioning designs to developers via dev mode and then pushing them to production. That combination of customer growth, customer satisfaction, and expanding into new markets like developers is what's driving Figma's revenue to grow 46% year over year. But there are real risks to buying this stock, especially right after its IPO. Figma's S1 filing makes special mention of competitive risks from AI-native design tools like Midjourney, DALL-E, and other generative AI platforms focused on automated design creation. If those tools start handling more complex interface design and prototyping tasks, then they could reduce demand for Figma's platform. Adobe tried to acquire Figma for $20 billion back in 2022, which shows just how much of a threat Figma is to their overall business. Adobe's Creative Cloud generates over $20 billion a year, and they're investing a ton to integrate generative AI in almost every tool in their suite. That makes Adobe a huge direct competitive threat for Figma with a lot of resources and market reach. Heck, even I use Adobe's tools to make these videos. So I firmly believe that Figma's AI strategy and the success of Figma Make will decide if the company captures the design market or gets disrupted by more advanced AI workflows from their competitors. Ultimately, if you believe collaborative design will form the foundation of how all digital products will be built in the AI era, then Figma is a solid stock. On the flip side, if you believe more specialized AI-powered design tools will become commodities, then Figma can be more easily replaced, which would make it a pretty expensive bet against the generative AI revolution. As for me, Figma is high on my list of long-term moonshots, which usually end up being 1 or 2% of my overall portfolio. I'll definitely consider investing more as we get more earnings calls and as they win more big customers like Netflix and Stripe to validate their business. When it comes to IPOs, that's the best way to get rich without getting lucky. And if you want to see what else I'm buying to get rich without getting lucky, check out this video next. Either way, thanks for watching, and until next time, this is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.